providing live finance advice on WMAC since 1993. It's time for Your Money with Steve Rosenberg, Sherry Goss, and Randy Goss. To participate in today's program, call 478-742-0940 with your financial questions or comments. And now live from the Macon studios of News Talk 940 WMAC, it's Your Money.
Good morning on this beautiful day. It's just not beautiful here, but it is beautiful somewhere. Steve Rosenberg, Randy Goss this morning.
Good morning.
Sherry is recovering from a visit.
You know, we've got you and I have a lot of big shoes to fill because you and Sherry have had like the Steve and Sherry comedy hour for the last 3 weeks. It's been great.
Make fun of you.
You can't make fun of me? Why stop today?
There's nothing funny about you. There's nothing crazy about you.
Really?
Yeah, you're normal. I don't say how you've stayed normal this long, but you're normal.
I'm closet crazy, okay?
I guess so. Anyway, welcome to Your Money. Steve Rosenberg, Randy Goss are here till 10 o'clock, live and in color. 742-0940 is the number. Good morning, you're on Your Money. No, you're not. You were on Your Money.
You were on Your Money, so give us a call back.
Your moment of fame. That's just
you know what? While we're waiting for him or her to
try it again. Good morning.
Good morning.
Hey, Randy,
Hello.
Hello.
Hey, Randy, this is Darius Maynard.
Hey, Darius, how are you today?
I'm well, and yourself?
I'm great.
Good.
What's going on with you?
Just wanted to come on for a quick second and share with your listeners about an awesome opportunity that we have going on in Central Georgia.
Central Georgia Community Foundation, I believe, right?
Yes, Community Foundation of Central Georgia. That's correct.
All right.
What is it?
And so on November 16th, from November 16th to the 20th of this month, we're going to be hosting for our third year an initiative called On the Table. And On the Table is And On the Table is a one-of-a-kind opportunity that brings people of diverse backgrounds together to have meaningful conversations about topics that are important to them and to their community.
And y'all did this the last couple of years, haven't you?
Yes, we have. This is our third year, and of course, this is our first time doing it virtually, so we are in uncharted territory, but we're going to make this thing happen.
Oh, everyone loves Zoom. You know that. So. Steve, don't you like Zoom? Yeah, that's about the look we get on our face when we have to watch all these Zoom meetings every day. Anyway.
Well, luckily, this one won't be over Zoom. It'll be through a platform called Hopin, which is like a virtual conference or convention type ordeal.
Okay, very nice. So,
how do people find out about it?
So, you just go to onthetablemaking.com.
onthetablemaking.com.
And you'll be able to find out more information. And right now, we're looking for table hosts. And so table hosts can develop their own table and come up with their own topic, come up with their own questions of discussion and things of that nature.
That's pretty cool.
And then,
do they have to have any set of skills?
No, not at all. And what happens is that when they sign up to be a host, we have a virtual training that they can go through, and then we'll do a demo before we go live the week of November 16th. So they'll get, all their questions answered in person as they need to.
Well, that's great. That's awesome, Darius.
Yes.
Thank you for calling and letting us know. But I can tell the listeners that you can also go to Newtown Macon, their website, downtown at newtownmacon.com, and there is a write-up in there about On the Table, and it gives you a lot of great information. So, Darius, I appreciate you calling in this morning.
Of course. Thank you so much, Randy. Y'all have a great one.
And thanks for being a listener.
Right. Thanks, Darius. Appreciate it.
Of course.
All right.
Take care.
Bye. Darius is on the Macon Art Alliance Board of Directors with me.
Oh, okay. So you guys run the whole thing?
No. Actually, Julie Wilkerson runs the Macon Art Alliance, which is the art agency.
What do you do?
I'm the board president this year. And so I'll roll off in June, and then Amy Adams will pick it up next year. So they do a lot of good stuff there, helping bring the community together and different things in the art sphere. So
good.
It's a good thing. While we're on that, last night was First Friday, And I know First Friday has just not been what it was before, but last night was pretty good. A lot of the offices or the stores downtown had to limit the number of people that came in at any one given time. But I went to the Make It Art Alliance, and I also went to the 567, which is another art agency just down the street. And they have some of the best Christmas ornaments, like hand-blown glass and
Really?
Christmas balls and icicles that are out of glass and wood. And I mean, it's just absolutely wonderful stuff. So if you're looking for a gift for anybody, y'all should check out both of these organizations, the 567 as well as the Make It Art Alliance. But and they have an online presence.
Is
they
it
sell
Art
everything.
Alliance or Arts Alliance?
Arts, plural. Make It Arts Alliance. And let's see. Darius called in about on the table, but also starting November 27th through January 3rd is the Christmas lights will be kicking in. And if you're wanting to go to a concert downtown, they're going to have they're going to block off the intersection up by the courthouse. And so it's at First and Poplar, and for the entire block, it'll be nothing but a concert down through there. Yeah, and that's going to be on November 27th.
So who's doing the concert?
It's going to be the Making Pops.
Making Pops.
And
They're good.
if you have they're fantastic. And I think this year it's not going to be the orchestra. It's going to be more of a smaller group.
Handful of people.
Yeah. But the cool thing is this year they're going to have it tied to a radio station. So if you have people that don't necessarily have or want to get out in the crowds, they can just keep their windows rolled up and just tune in the radio and drive by and see everything.
Oh, cool.
So
when is that?
That's on November 27th.
That's a Saturday, Saturday after Thanksgiving, right?
It is, I believe. Let me just open up my calendar here.
Okay. Wow, your phone has a calendar.
Yeah, I know.
How'd
It's crazy.
Get that big calendar?
I don't know. It's nuts. Okay, it's a Friday.
Friday. Okay.
Yep. So anyway, if y'all are looking for something
Don't
to do,
stay out too late because you have to listen to our show Saturday morning.
That's right.
We don't want you hungover from listening to music.
Yes, we want you hungover from listening to us. So, and also coming up starting November 13th through 19th, if you're looking for Christmas gifts or whatever, again, Fire and Ice. That's going to be held in the Central City Park in the Round Building. I encourage you to come out and take a look at this. It's always a great event. And if you want to be a sponsor, give us a call at the Make It Art Alliance. Anyway, what else you got, Steve?
I got some stuff. I got stuff. So this is great. San Francisco voted for a CEO tax to rectify wealth inequality.
A CEO tax.
Yeah.
So if you're a CEO, you've got to pay an extra.
Yeah, because you're making too much money.
Oh, yeah.
So that's.
So what if you're the CEO of, say, a painting firm, one-man firm?
They won't know about you.
Okay, so it's got to be a registered company?
They have to be able to find out what you're making, and you can find out how much all these people are making, from their the data that the companies file.
Okay, the K1s maybe, or not K1s.
No.
There's something.
Something.
Yeah, I can't remember what the name of that form is.
So anyway, there's been a steady increase in wealth and income inequality in the United States. And that's true. I mean, it's really.
It is.
I mean, there's always been, but this is crazy.
And it's gotten worse. It has.
People making billions and billions of dollars. The disparity between the ultra-rich and the working class has been exacerbated during the pandemic. Millions of Americans have lost their jobs, and thousands of small businesses were ordered to close down operations due to COVID-19, while the majority of Americans suffered through 8 months of lockdowns, loss of earnings, eating their way through emergency funds, struggling to make rent, mortgage, and college tuition. CEOs like Amazon's Jeff Bezos added billions of dollars to their net worth. CBS News wrote other billionaires whose fortunes have risen during the pandemic include Microsoft co-founder and philanthropist Bill Gates, whose wealth jumped 20% to $118 billion since March, and then Zuckerberg 85% to $100 billion. We could get up to $100 billion.
Yeah, we can.
How do we do it? Just knock them off. Are
you talking about us personally?
Yeah.
I'm laughing about that. But these are the companies you're talking about are the FANG, the Facebook, Apple, Amazon, Netflix, and Google. And they have had a tremendous an increase in wealth. Now, if they wanted to do something good, maybe they could sell a few things at cost until this whole thing is over. But I don't think anybody would, especially their shareholders, would want them to do that. So
no, I don't.
Well, Steve,
I don't think so.
I know everybody is. What you looking for?
My iPad.
Oh,
Barron's articles that I can read.
Gotcha. The 2020 election meltdown, that didn't happen. It's like everyone was expecting riots in the streets, and
It's not over yet.
It's not over yet, but considering all the stress and drama of this year's presidential race, it may be difficult to view the 2020 election as a success. Close elections in polarized societies place great strain on our democracy, and after all, no matter who eventually wins, nearly half of the country is going to be disappointed, perhaps even outraged by the result. But from the perspective of the election administration, the past week has been a surprising success. We had record turnout, and except for possible fraud and some voting irregularities, those seem to be the biggest problems right now.
Yeah.
But I will tell you, if your candidate did not win, just take a breath. Just wait for the process to work itself out. And I will tell you, and I think we all know this, that we're still the greatest country on this earth. And with a divided government, it helps halt certain agendas that you may not agree with.
That's why the market's gone up.
That's right. And I've got some articles. We're going to talk about that in just a second. Still, this land is a land of opportunity, and it's just, despite what some might say. And I pray that we all just kind of keep a level head about this and not panic.
Here's a great article from Barron's. See, I can get it on the app. I just can't get it by going to Barron's.
That's crazy.
I got the Apple News app, and you can get all kinds of newspapers.
Yeah.
And some they lock you out of. But this one's entitled. This is from Barron's, which is a publication of Dow Jones, which also publishes the Wall Street Journal. The headline is, "The stock market doesn't care who the president is. By all accounts, the prospect of a contested election should have made for a horrible week in the stock market." Then it says, "It's the economy, stupid." That quip from James Carville helped Bill Clinton win the presidential election in 1992 and has been remembered for its simplicity and effectiveness. Now, with another election being decided as of this writing, it's the economy is appropriate again, not because it propelled either candidate to victory, but because a recovering economy will make sure the stock market keeps winning regardless of the outcome.
Yep.
By all weeks, it should have been a terrible week for the stock market. At the close of trading Friday, we still didn't know whether Joe Biden or Donald Trump had won, and we still don't, or which party would control the Senate. There was also set to be at least 2 recounts, one in Georgia, one in Michigan, with likely more to come. It's the kind of uncertainty that the market is supposed to hate. Instead, the stock market embraced the unknown. The Dow Jones Industrial Average gained 1,821 points, or 6.9%, and the NASDAQ went up 9%, and so on and so forth. The consensus quickly coalesced around the idea that it's a divided government. It would be good for stocks because they can't pass anything.
That's right.
That's what you want.
Yep.
No laws can be passed.
Well,
it's a perfect environment.
Yeah, that and there's a lot of good things that are happening in the background, like the Feds are holding interest rates near zero, right. And they came out and said that their benchmark interest rate is going to stay anchored between 0 and 0.25%, and that it's going to stay this way until the economy really starts showing signs of growth. And that is a good step, in my opinion.
And the other thing, if I can find it.
Well,
what?
I can say we do have some upticks in the economy. I've got an article here that says the drop in jobless rates shows healing in the labor market. We put on another 906,000 jobs last month, and of course they lost 268, so a net of 638,000 jobs put on the board. So we're still about 11% lower than February, March, when the COVID took place. But we're getting there, and hopefully we will continue down that road. It's going to take, they say it's going to take probably 2 years to reach the pre-COVID job rate. So,
yeah, it will.
So
this is another article from Barron's. It's a great headline. Gold, no thanks. Investors' new favorite safe haven is tech stocks.
Oh yeah, they're doing great right now.
Yeah, the article.
Did you read the Kramer article? And it says Kramer says a Biden presidency with the GOP would be so boring. and that's great for stocks, is what he's saying.
Yeah.
He said investors are cheering the prospect of Democrat Joe Biden becoming president because Joe Biden would provide more stability than President Donald Trump. And the day-to-day machinations of Wall Street, that's a tough word to say on the radio, will be less will be less of a focus for Wall Street. And he said it's going to be boring. They're not going to be part of our existence. It's joyous. We'll just have to take a look at the earnings of the company and not all the political wrangling that goes on in the background.
Yeah.
And I can say we can only hope. So. That was it.
Okay. So anyway, this is gold. No thanks. Investors' new favorite stock haven is tech stocks. Forget about gold. At a tumultuous time, investors are finding a haven in Facebook and Alphabet and other tech shares. And full disclosure, we own those in our managed portfolios. Investors woke up Wednesday with the country in purgatory. The next occupant of the White House was unknown. Control of the Senate was a toss-up, and key policies around health care, the climate, tech regulation, and economic stimuluses were blowing in the wind. So naturally, gold fell and stocks surged, led mainly by the technology sector.
Mm-hmm.
Facebook, which we also have, ended the day up 8%. Amazon gained more than 6%. The tech-heavy NASDAQ finished up almost 4%. There was more election clarity by the end of the week, but the market's initial response was a telling sign of how investors have rethought their portfolios in recent years. Tech stocks have become the ultimate haven, and we've never had this many tech stocks in our portfolio before. And that's because people are stuck at home using technology. I mean, it's a pretty simple reason for it. They're on the internet all day long and everything, and the kids are at home doing stuff, and the parents are at home doing stuff.
I don't know what Biden, and if he actually becomes the president, I don't know what his stance is on deregulating some of these technology companies. But technology will do better. Yep, technology will do better if the threat of regulation and breakup is dissolved. Whereas industrial and minerals might do better if there's an ongoing economic stimulus in the infrastructure spending. But the question is, what's going to happen, Steve, if this election is protracted for, say, a month, 2 months? What's it going to do to the stock market?
We went to Gore and Bush.
Yeah, we did.
And
I mean, that was just like you said the other day. That's just one state.
That was just one state, but it held up everything.
Yeah.
Because for sure.
Yeah. And I go back to what I said before. This is the process, and I don't agree with everything that Biden says. But he did say something yesterday that was very, very good. He said that democracy is sometimes messy.
It is.
And that's exactly what we've got going on right now. So we just have to stand by.
Yeah, I think the thing is, people are so divided, and both sides are acting like it's a total disaster, and it's not.
It's not.
We've been through and I've been telling my clients this for weeks and weeks. We've been through all this stuff. 1960s, Nixon was talking about the elite media, and the left-wing part of that. And we've gone through it with president after president, and it's always a disaster at the time, and it always works out. This history repeats itself. It's the same thing over and over and over. We talk about the kids are spoiled and that kind of stuff. Well, your parents thought you were spoiled. And
That's
their
right.
parents thought they were spoiled. And their parents thought they were spoiled. You go back to Greek days, and they were talking about the rotten kids. So, I mean, that's just it. And everybody takes it so seriously.
Yeah.
It is totally irrelevant. I mean, we've gone through all this turmoil over the last 10 years, and everything has worked out nicely.
That's right.
And we've had ups and downs and this and that and this and that. It doesn't matter who wins. It really doesn't matter who wins. There's a few things here and there. Taxes might go up, taxes might not go up, all that kind of stuff. But the fact of the matter is, people are getting wigged out over really nothing because we've had great presidents and horrible presidents, and we've made it through.
And we're getting wigged out because the news media wigs us out.
And they want us to be wigged out, so we watch them.
Yep. And so you hear us say it on the show quite often that we just need to cut the TV off, especially the online news, and read a paper about it, and get a balance of newspaper so that you are getting two sides to the story. So I have a great article here, Steve, that talks about the earnings on Wall Street and why Main Street's still lagging behind. And I thought it was very good because I've heard this before. People were like, well, they need all these people who own stocks, and that's just about everybody who has a job, 401k. A lot of folks just don't realize that their 401k has stocks in it. Right. But let's see here. So even before the bank earnings, nearly two dozen companies, including the heavyweights like FedEx, Lennar, CarMax, who have already reported third quarter earnings, and all of these exceeded their expectations by about 25%. A combination of slowness, but what's driving the increase in earnings with these companies? It's a combination of slowly improving economy, a lack of earnings guidance, and an overly cautious analyst community. An emphasis on corporations improving efficiency, and a belief that a vaccine will be coming in the early 2021, and it's nudging corporate earnings higher. There are nearly twice as many S&P 500 companies receiving upward earnings revisions versus those experiencing cuts. And that's interesting because a lot of folks don't realize that companies are able to go adjust their earnings forecast on a regular basis. So when COVID was first taking hold of the nation, they were able to make their projections, low.
Lower, yeah.
And so now that everything's kind of coming out of the gray, then they're exceeding those expectations, and that's not uncommon.
And companies are making more money because in a lot of cases people are just working from home.
That's right.
So they don't have office space to worry about.
That's right.
And stuff's getting done.
Yep.
And stuff. You call customer service, you get service.
Right. But here's $1 million question: why are earnings so much better when much of Main Street is in dire shape? There is a difference between Wall Street, the investment economy, and Main Street, the so-called real economy. Main Street observers have long complained of this disconnect, with GDP estimates to be down 4 to 5% for the year and millions out of work. How could the stock market be approaching new highs? Should there be some correlation between GDP and the corporate profits? There usually is, but Wall Street does not exactly represent Main Street, and the COVID downturn has highlighted those differences. The main reason for the divergence is that the U.S. economy is heavily weighted to the services like retail, restaurants, and doctors rather than selling goods. But the earnings profile of the S&P 500 is more heavily weighted towards companies that sell goods. And the more we purchase from these online companies, the greater that disparity is going to be between Wall Street and the Main Street.
And remember that the S&P index is weighted based on the market cap of the stock, which is the price times the number of shares. So what you have, and during various times periods, you have a handful of companies. Like there's 500 stocks in the S&P, and the top 10 control most of it.
That's right.
Because there's in the names Amazon, Netflix, Microsoft, and all those.
Yeah, in the Nasdaq, which is generally tech, the top 10 account for 50%, leaving of the earnings there, and leaving the other 90% of the stocks with less than 1/2 of the index value.
Yeah, and that's just the way it works. The Dow Jones is more evenly balanced because of the way it's done.
Mm-hmm.
the Nasdaq is weighted by they take the price of the stock, multiply it times the number of shares outstanding, and you get what's called a market cap, which is technically the value of the company. And so the top 10 in the 500 is overweighted with the big names we all know, whereas the Dow Jones kind of tries to more equally weight all those. They were the industrial companies. Now you're getting some big companies like Apple and Microsoft.
And the reason the S&P 500 represents the Main Street a little bit better is because they are pretty diversified amongst the holdings that are in there. So you've got IT at 26%, healthcare at 14%, financials, consumer, industrials, consumer staples, energy, utilities, real estate, minerals, and telephone services, all taking a much lower percentage. Where was I here, Steve?
I wasn't listening.
Okay. That doesn't surprise me.
And if I was listening, I don't remember.
Okay, let's see. The main reason for the divergence is, the big difference is this. UBS estimates that services comprise 83% of U.S. economic activity, but only 54% of the S&P profits. So what you're seeing when the downturn hits, you're seeing a lot more service industry in the Main Street who are not making it because they don't have the resources to do debt, compete. They can't get the big government stimulus packages. They are not able to sell, debt instruments so that they can make up the money. So it's a kind of an interesting thing for investors or people who want to be investors because they see these stocks going up all the time and they get itchy. They see the retirement on the horizon and they want to get a part of that, and you've got to be careful trying to keep up with Wall Street because a lot of times by the time you hear about a stock that's doing really good, it's too late. You've got to be on the leading edge of everything and be doing a ton of research behind the scenes. And what you need is a good financial advisor, preferably a CFP, and a company who is a fiduciary. And wait, Steve, that's us. We are Rosenberg Financial Group, and you're listening to Your Money with Randy and Steve. And we have offices in Macon and Warner Robins for your convenience. And we have a lot of great articles on our website that can help you through answer some questions, be it how to manage your money if you happen to inherit it. You need a life book that can help you catalog everything that you have for
that's
your
all free
heirs.
on the internet. You just have to print out the pages.
That's it, 100% free. And now the life book, we do have hard copies of that in a binder that Sherry's had professionally printed.
They sell for $3,000 a piece. There's collectors.
It's gone up. We're selling them for $5 now.
Oh.
And if we have to mail it, it's probably like $7 or something like that. But it really just
for the profit objective.
Yeah, really. Hey, but while I've got your ear and we're doing the shameless plug at the halftime, if you are a pre-retiree or in retirement, our Retire and Relax program is worth taking a look at. And I encourage you to come see us. And we offer complimentary consultations with Steve, Sherry, or Becca. And speaking of Becca, we recently hired a new certified financial planner, Rebecca Wilton, and she'll be handling a new investment vehicle that has much lower entry amount. So if you want to start something for your kids or for yourself, and you don't have $100,000 and up to put into the Retire Relax program, then this program might be exactly what you're looking for. Becca has also created a series of videos on financial planning that can be used for free to help educate employees or teach anyone how to take better control of their financial future. And Sherry is also back on the seminar trail. So if your organization is looking for a guest speaker, give us a call at 478-922-8100. She can talk on everything. Steve often says that she can talk to a signpost. So you can just give us a call and tell us what topic you'd like for her to address, and she'll get in touch with you and work out the details with you. So, all right, that was our shameless halftime plug.
You're going to love this sentence.
Uh-oh, let's hear it.
This one?
No.
America's top 644 billionaires saw their wealth skyrocket by a collective $1 trillion. The disparity in wealth is reflected in, here it comes, the K-shaped recovery.
I saw that. I did. Wait, hang on. For those who don't know, in the stock market, they use a lot of different symbols, alphabet symbols. And
this came from Forbes.
Yeah, and
so they picked up on what we were talking about.
Yes, they did. We were talking about this in our office the other day, and we were laughing about it because one of the analysts on the big major network said that the stock market is in a precarious situation at this point. It represents a K right now. And so when you're looking at the vertical leg, and that coming off the middle of that vertical leg, you have a leg going up and a leg going down. And so what this represents in these really smart, what are they called? They're analysts. They're saying that the stock market can go up, it can go down, or remain the same, which is right in the middle of the V of the K.
So the way the sentence said, the disparity in wealth is reflected in the K-shaped. This comes from Forbes. The K-shaped recovery, coined by economists. I thought it was Lou. Anyway, as illustrating how one small segment of the population realized outsized gains and a much larger group found their fortunes rapidly declining. It seems if you're a CEO, top executive, venture capitalist, successful tech entrepreneur in San Francisco, Silicon Valley, you've reaped incredible wealth. Meanwhile, the vast majority of residents can't afford decent housing. This comes back to this thing about San Francisco. In an effort to rectify matters, San Francisco rolled out a new piece of legislation. The new law calls for any company whose executive earns 100 times more than the average worker will pay an extra 0.1% surcharge on its annual business tax payment. If a CEO makes 200 times more than the average employee, the surcharge jumps to 0.2%. 300 times gets a 0.3% surcharge. That's not a 3%. That's a 0.3% surcharge. Additionally, sweeping business tax changes that will lead to higher tax rate for many tech companies and a high transfer rate on properties that were passed by voters. So what's going to happen is companies are going to move out.
That's exactly what will happen.
Yeah.
You remember back in the Jimmy Carter time when they put the luxury tax on boats and expensive cars and stuff. What did people do? They didn't buy them from America. They just went outside of America and got them and had them shipped in.
Yeah.
And worked around the law. But I did hear that in California they're trying to impose a tax on any company that leaves that state. For 5 years, they have to pay the taxes that they were paying while they were in that state.
Really?
On top of what they pay outside. I'd like to see them try to enforce that. And that would be interesting.
Yeah, because they're out of the state.
That's right.
I think it's too bad. It's too bad what happened to San Francisco.
It is. It's horrible.
It was a great city.
It was a great city.
And the weenies ruined the whole thing. So what are you going to do?
But some good news here is that
it's going away. It's going to go into the sea.
It's the next big one. Watch out for it.
Yeah.
Manufacturing is moving back from China at a faster rate than it ever has been. The confluence of political pressures and current world events is creating an environment which manufacturing is moving back from China to the United States. Without regard for personal politics, the tax cut and the deregulation activities engaged by Trump deserve some of the credit. Additionally, Trump's trade war with China, which levied significant tariffs on Chinese goods, I don't necessarily agree with tariffs, but it does seem to be working, is another partial reason the manufacturing is moving from China to the United States.
Every other country has a value-added tax, so
that's
everything
right.
we send over there gets jumped up, and
right.
Yeah, so they're collecting it. So it's not a fair playing field because we're not taxing. If we don't tax the stuff coming in, and they're taxing the stuff that we send to them, it's not fair. So no.
Oh, okay. Let's see here. The Chinese the reason things are moving back is just not the cost, even though the Chinese wages have risen significantly over the last decade. It's the geographical distance from the U.S. and the European consumer markets. And when you're working out of China and having to ship it all back here, you have a supply chain risk. And a disruption in the shipment of goods across the ocean from the Far East have become more the rule than the exception. So I'm glad to see that companies are moving their supply chains back here because things like our ammunition for the military, they've found out recently that's all coming from there, and that most of the medications that we have here are being produced over there, and and not to mention the intellectual property theft. But it's good to hear that things are coming back to America, and it's going to be giving Americans a lot more jobs. So hopefully that will stem some of the job losses since the corona. But Steve, with the coronavirus, a lot of companies have had to re-engineer what they do. We were laughing the other day that Coca-Cola cut out over 230 of their products. Like Tab. And I think we both agree the only way to make Tab better is to put a little Jack in it. So
it's a horrible drink.
It's a horrible drink, and it never was good. But anyway, some companies that during the corona they're experiencing a significant backlog in their products because more and more people are not wanting to go even out to eat. They don't want to go to a gym. Peloton, which is right in your alley, so if you got tired of spinning at the gym, you could buy yourself a Peloton bike and go online. It's taken those guys sometimes 6 and 8 months just to get one bike to a customer because they cannot get them made fast enough. And there's a huge increase in stay-at-home activities such as online gaming. So companies like Activision, Blizzard, and several others, really, the Live Nation, they have all experienced a tremendous amount of increased revenue. But other companies like, say, SeaWorld, those guys, they lost like 78% of their revenue since Corona took place. Yeah. And Wynn Resorts was down 48%. Actually, SeaWorld was down 73%. And Live Nation was down 78%, another casino. And Cinemark, which I found this fascinating, Cinemark Holdings, which is one of the big movie houses in the United States, they reported 1.9 million patrons during the quarter. That's compared to 73.3 million prior to the corona. But what are they doing to fix their lack of income? Like the Cinemark Holdings, they're actually renting spaces for people to hold private viewings and parties. So you can have you and 30, 50 of your closest friends show up at the theater, and the thing's all yours. You can do corporate meetings there, or you can just show up to watch a movie with your friends. And so far, they've had over 50,000 private parties, which is approximately 600,000 people. I mean, that's just one way. It's not enough to curb that loss in revenue, but they're trying. I know when the corona first took place, and we've mentioned this before, we were talking to some of the restaurant owners downtown about what they were doing to stay viable, and they said that they've gone back. Didn't go back. They opened up the takeout, which they've never had before, and some of these restaurants, I was talking to one last night, as a matter of fact, they said that the takeout will be a main part of their business model going into the future. There's something in this. Let's see. Hang on. I got this great little bit of information here from Newtown Macon that says basically that, I can't find it right now, but basically it said that we've only had about just a very small number, 2 or 3 businesses that have gone out of business during the COVID, and we've actually added 12 new businesses downtown since COVID started. So, there is still opportunity out there. If you've got a good idea, I recommend you going over to the SBDC, which is over at our Macon office area, right beside the River Crossing Mall, and pitch the idea to them. They do it for no cost, and so all you got to do is make an appointment and go in there and talk to one of their very talented counselors. So, what else you got there, Steve?
There's a bipartisan retirement bill offers later withdrawals and paths to lost accounts. Americans would be able to wait longer to withdraw money from their retirement plans and have an easier time finding old, forgotten accounts under a bipartisan proposal that contains a broad mix of measures to encourage retirement savings. The sponsors are Richard Neal, a Democrat from Massachusetts, and Kevin Brady, a Republican from Texas.
Steve just showed me his.
I just printed it out on recycled paper, so it says something. Anyway, it won't become lawsuit, but it builds on a bipartisan retirement policy changes enacted last year as an example of an initiative that could advance even if control of the government remains divided in 2021. According to a report the Federal Reserve published on Monday, about a quarter of Americans surveyed who had yet to retire said they had no retirement savings at all. Less than 40% felt their retirement savings were on track. The proposed law, which was greeted with statements of support from the retirement industry organizations, would make it easier for employers to offer 401 type accounts by increasing a tax credit that small businesses can get to cover the startup cost, and it would offer an additional credit to some small businesses that would, based on, I can't read that part. It's covered by something else. Evidently, I put recycled.
Steve, you can afford
two-sided recycled paper in my printer, and so on the top of this thing is like a spreadsheet over the printing. Anyway, but so they're talking about increasing the age for required minimum distributions to 75 from 72.
I think it's a good idea.
For those born after June 30th, 1949. It would waive required distributions entirely for people who have accumulated $100,000 or less in their retirement accounts. See, that's good.
That's good.
The only reason they have required minimum distributions is the government wants your tax money.
That's right.
So, anyway, 7420940 is the money. Good morning. You're on your money.
Good morning.
Randy and Steve.
Yeah, good morning. My name is Patrick. I live in Warner Robins.
Yeah.
And I was listening to you guys talk about a little bit about the election and about China.
Yeah.
And so I had a question, and I was wondering, with a likely change in the administration, do you feel that the pressure that the next administration might not put on China could lead more to their planned agenda of world domination? Do you feel that we should be maybe not so concerned about that still?
No, I think that's important, and we do. And I don't know that they're going to put it because Biden came from Obama, and they didn't do anything to put pressure on China. So,
and I've heard, I actually read something last night that Biden would like to roll back some of the tariffs and everything and make it easier for China and to do business here. So, and so as far as their world domination goes, I think whether we have tariffs on them or not, they're going to continue down that path by building new islands out there in the
South China Sea,
and really they're not being super good neighbors with anyone around them right now. So I think that's still something that everyone should keep an eye on. But I think the world leadership kind of can keep a thumb on them for the most part.
Yes, and that's good to hear. And I think also with this virus thing, I think that helps many countries to want to be able to hold China maybe a little more accountable for some of the things that they've been up to. But I do feel that we need to keep the pressure on China, and the next administration may not be so outgoing with that that strategy. And so I think, like you say, we definitely need to keep an eye on it. And
I mean, Trump got it started, so it's not like they have to start to do something
That's
differently.
right.
All they got to do is just keep doing the same thing.
That's right.
And that's always easier.
And you're right, with the coronavirus coming out of Wuhan, China, I think, and the world knows it, and the fact that they kept it under wraps for as long as they did and not sending up a flare, I think it really does put a little bit of pause into anybody wanting to do business with them, especially national governments, at least with the old way that China wanted them to do business. So I think it does make other countries have a little bit of pause before they jump over there or trust what they're saying.
Yeah, so I'm hoping that trend continues where, companies will want to pull out of China and maybe go elsewhere, Vietnam and other countries in that area. So,
right.
And that's good. And by the way, Randy, I listened to you and I listened to Sherry and listened to
the other guy, Steve.
The other guy. Talking about me.
Yes, I am talking about you. And you guys got a really positive attitude. It's great to hear. It really is, and we need more of that going forward.
Thank you very much.
Yeah,
appreciate that.
And thanks for being a listener and calling today. And call back anytime.
Yeah, thank y'all.
Thank you. Bye.
Yeah, it's there's a lot of stuff going on. I saw we should have had Hulk Hogan as president because he'd go over there and just beat the living what out of everybody.
Who was the guy from Wyoming? It was another wrestler that he was just in your face all the time. I can't remember his name, but anyway.
Yeah. Hulk Hogan? No, wasn't Hulk.
It wasn't Hulk. I don't think it was. Anyway, hey, let's talk about how to lose an inheritance.
Okay, let's lose inheritance.
All right. Most inheritances are about $50,000. And whether you come into a little money or a lot, waiting to make any moves is one of the biggest things you can do to help yourself. There's the lady in the article here, when Elizabeth Root learned that her uncle had left her almost $1 million after his death earlier, she panicked. The inheritance was more money than she had ever handled. She was smart, though. She got with a certified financial planner, and she suggested that they place some of the cash in an emergency fund and invest most of the money for the long term. That was a very good move on that person's part, but a lot of people, when they get money, and I think you see it, Steve, too, that
gone.
They look at it as free money.
Yeah.
And they just go spend it. And $50,000, if that's the average, $50,000 today does not go that far. It sounds like a lot when you are maybe working for minimum wage, but go buy a new car. You're almost at $50,000 to get a decent, car with a lot of the amenities on
glass.
Glass in, tire, headlights,
and windows.
Windows. Windows are
windows. That's cost you more money.
That's right. That floor mats are free now, but windows cost you more. But anyway, one study found that adults who receive an inheritance save just half while spending, donating, or losing the rest. Nearly 20% of the baby boomers who received $100,000 or more spent their entire gift. And
I've had a lot of people over the years inherit money, and the kids or the spouse just flew through it.
Yep.
And they have nothing to show.
That's right.
At all.
And we've got a great special report on our website at www.retirerelax.com that talks specifically about this. It's called Instantly Wealthy. And in that article, we talk about moving into a decision-free zone for at least a year is what we recommend in that article.
Yeah.
And you need to get a certified financial advisor working for you, and an accountant, a CPA, and the biggest thing is you've got to resist the new entries into your life.
And you got to keep it quiet.
That's right.
Because all your friends will be all over you.
That's right.
It's like most lottery winners blow all their money because everybody's all over them for money.
That's right. And in this article it says resist new entries into your life. So new people just the third cousin twice removed that shows up. So, hey, I heard you got this. I've got a friend that works for me every now and then, and he inherited about $20,000, and every person in his family showed up for money. They thought, and he says it's just common amongst his peers. Anyway, let's see here. Beware the tax bomb if you get money, so you make sure you talk to your CPA. And let's see. And one of the biggest things you can do, if you got people that come up to you and want to borrow money, there's a good article that I've got in my hands right now that talks about how to avoid the awkwardness of people asking for your money. And you think about talking about the elections is bad, and people don't want to talk about money. People don't like to talk about their money, but other people like to come borrow money from you.
And they really like to borrow money and not pay it back.
That's right. Many Americans still think money is too taboo to talk about. A recent study by Capital Group found that Americans felt more comfortable discussing mental illness, drug abuse, problematic marriages than they do talking about their incomes and how they manage their money. According to a 2019 survey by Bankrate, 60% of Americans have helped a friend or family member by lending them money, expecting it to get paid back. Of those respondents, 37% reported losing money, and 21% said that the relationship with that person worsened. If someone close to you or a family member asks for money, I want you to keep the following recommendations in mind. Consider their credit history. Okay, when someone asks for a loan from a traditional source like a bank, that lending institution always pulls their credit report, and those individuals can get their credit report and their FICO score in so many different ways now. There are free apps you can get your FICO score. You hear about those on the radio all the time. So have them provide that for you. If the borrower has bad financial habits...
Well, forget all that. Don't lend money.
Yeah, that's really...
Was it Shakespeare said, neither a borrower nor a lender be. And that's really good advice.
That's right. But people are still.
I remember him. That's how I remember the quote. We hung around a little bit. I go over to England, and he was always. I went over to his house for dinner.
Didn't you help that guy build that crooked building over in Italy? You know.
Yeah, well, that was my fault. I said a little more to the left.
Yeah.
And he did.
But there's a swamp over here.
I did. Yeah, I didn't know.
But anyway. If the person has bad financial habits, take that into consideration and just tell them no.
And here's the other thing you can do. If you are a parent and you have kids that you know are going to fly through the money, go to an attorney, get a trust set up, have that money go into the trust, and have specific rules and regulations on how they're going to get any money, how much they can get, what they can get it for, and make sure that they don't have control over the trust. So you want to have a trust that has a third-party administrator, like a bank, because the bank is going to do whatever the trust says.
Right.
Whereas if you have a relative, they could say, well, I'm going to do it anyway.
Well, now that's good for inheriting money or receiving a lump sum. But if someone's coming to you to ask, hey,
don't lend money.
Hey, give me $20.
No. No.
I get you.
No.
I feel you.
No.
I'm here with you.
No way.
You heard it today from Steve Rosenberg, Rosenberg Financial Group.
Don't
loan money.
Because you're loaning money to people who are irresponsible.
Sometimes, but what if your kid comes to you, Steve, and they have an idea that they want to invest? They basically want you to invest in their good idea. You know, and a lot of parents. A lot of parents.
No.
A lot of parents do this.
No.
Would you stop? A lot of parents do this though. My granddad did it with both of my uncles, and neither one of their multiple ventures ever worked out.
Of course not.
And
especially it doesn't work out because it's not your money.
But one of the things that as a good education for your kids is say, we can discuss it, but first I'm going to want you to bring me a business plan, and then when they bring you the business plan, go to a local banker and have them take a look at the business plan with you and the child in tow, and then if it's if it's something viable, well, you might be able to help them invest, but you don't need to roll out money for them just because it's their good idea. They need to go out and maybe help build some of their own capital, so they have they have their own stake in the game. So, if your kid comes up to you and they want to do it, it's not a bad thing to at least talk about it, but they need to get the education from you. This is a great opportunity for you to educate the kids, because a lot of kids today are not getting the money smarts that you and I got from elementary school. And
I didn't get it. I got it from parents.
Did you? So I didn't get it from parents. I got it from school. They had classes on balancing your checkbook, managing money in general.
Oh, I didn't have that.
And then I went through the program. I don't remember what it's called, Junior Business Owners or something like that. And
Junior Achievement?
Yeah, Junior Achievement. And I went through that, and that taught you a lot about how to raise money, how to, what you need. Yeah, it was just great. But kids are not getting that today. But anyway, as I was saying, we have a special report on our website. And I encourage you to go download that and take a look at it. So, how much time we got there, CD? About a couple of minutes. About a couple of minutes? Is that time?
Here. Quickly.
Is that set to the world clock?
Quickly. 8 things people can do. Here's 8 things healthy people do every day. Number 1, they go to bed by 10. They breathe deeply. Oh, we get sound effects. They connect with other people.
I'm now holding Steve's hand.
They eat nuts. I eat a lot of nuts. I eat a lot of unsalted peanuts. They're strategic about sitting. Huh?
They're not slouching.
Need to exercise to stay healthy. They hit the gym regularly isn't enough if you're spending long stretches in a desk chair or on a couch. When you're sitting for prolonged periods of time, you're damaging your body. They laugh. We laugh a lot at our office.
We do. I mean, sometimes we actually seem unprofessional because some of the we have fun and laugh at ourselves.
We have a great staff, and everybody it's just all the time. They cook.
Yeah.
Cut back on delivery dinners and fast casual lunches and eating mostly home-cooked meals. And they go outside. Spending time outdoors provides vitamin D, crucial for strong bones and mental health, and gets you movies. Strolling along through the woods or in a park instead of a downtown city block would be even better. And meanwhile, we're out of time.
We have 1 minute left. So,
Oh, we have a whole minute left.
Steve, why don't you slowly tell us who we are and what we do and why we do it?
We are Rosenberg. Rosenberg Financial Group. We manage money for our clients. We have a money manager who does nothing but watch the accounts on an ongoing basis and make changes, and so you don't have to call and say, what should I do? Because I always say we're doing what you should do. If you want to do something different, we can do something different. That's up to you, but that's what we do. And we get compensated not by selling you something, but by charging fees to manage your money. We're registered investment advisors, and you can find all about it on our website, retirerelax.com. We got that cartoonish thing on the front page that explains in a cartoon fashion what we do, because we are a cartoonish office. Anyway, so it just kind of fits in with what we do. Anyway, have a great week.
Great being with you guys.
Stay dry, and we'll see you. With Sherry will be here, and me.
That's right.
Next Saturday morning.
Bye.
Bye.
The views expressed on the show should not be construed directly or indirectly as an offer to buy or sell any securities or services mentioned herein. Investing is subject to risk, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should only be relied upon when coordinated with individual professional advice. Securities are offered through Royal Alliance Associates Incorporated, member FINRA and SIPC. Advisory services are offered through Rosenberg Financial Group, a registered investor advisor not affiliated with Royal Alliance Associates Incorporated. Offices are located at 2517 Moody Road, Warner Robins, and 4875 Riverside Drive, Suite 201 in Macon. Phone numbers are 922-8100 and 741-4457.